Did you know that banks literally give away free money? No, not interest. Bank bonuses. Over the past several years, I made thousands of dollars by opening new accounts, following simple rules, and then moving on. Want to find out more and how you can do the same? Stick around while we grow together. First off, what are bank bonuses? Well, simply put, they are financial incentives or rewards given by banks to customers. The idea behind these bonuses is to attract new customers or encourage existing customers to use more of the bank's services. This video focuses on the former, receiving new customer bonuses. There are many different types of new customer bonuses. Usually you have to start by opening a savings or a checking account. Typically, you will need to qualify for the bonus by meeting some type of condition. This could be minimum balance, or making a certain number of transactions within a given period of time, or simply using direct deposit from your employer. There are caveats that we'll hit later on in the video. First, let's talk about my first-hand experience. Now, for my personal story, and to show you that this actually works with minimal time, focus, and planning, I'll go over an example from each year depicting various types of bonuses. I started using bank bonuses around 2020, and we'll dive a little deeper into each different type of bank bonus I did. My first bank bonus was with Fulton Bank. I earned $225 by making 15 debit card transactions within a few months. And don't think I spent more than I needed to, I actually made 15 individual $1 donations to charity. Another option would be go to the dollar store 15 times. This was followed by Santander Bank giving me $300, Bank of America $100, and Simple Bank giving me $500, rounding out my 2020 for a total of $1,125. 2021 was my best year for bank bonuses, and the best example was Citi Bank. This bonus was earned by completing their minimum balance requirement, and to preface, there are smaller minimum balance requirements. This one just happened to work out for me personally. I put my emergency fund in there, plus extra to reach their $50,000 requirement. After holding the account open for 3 months, I received my bonus of $700. This was followed by Capital One for $400, Citizens for $300, and to round out, Columbia Bank for $150. This culminated into a year of $1,550 in bank bonuses. Last year, I slacked off a bit. I only received bonuses from 2 banks. Chase was simple. I linked my employer's direct deposit and received $225. This was followed by M&T Bank granting a bonus of $400. Last year, I only received $625 in bank bonuses. In total, over the last 3 years, I made $3,300 from bank bonuses. This was done with minimal work and time by searching websites every quarter for less than 30 minutes, including the opening process and direct deposit setup when needed. Definitely being well worth the return. If you're interested in leveraging bank bonuses for extra income, your journey begins with some research. Seek out banks offering bonuses you're eligible for while being mindful of specific conditions like minimum balances. And there's no need to worry about your credit score. Bank account openings are almost always soft pulls, meaning they won't affect your credit. These new bonus earning accounts are best thought of as secondary accounts, while your primary account handles regular transactions like auto billing. To aid your search for bank bonuses and their respective requirements, consider exploring some of the following websites. These are NerdWallet, Bankrate, and Wallet Hacks. These sites will be linked in the description below. Through these sites, you can easily find the amount of the bonus, the requirements to receive the bonus, and the monthly fee plus how to waive it generally. Speaking of fees, we need to speak about the caveats and how they may eat into your earnings. New member exclusivity. Bank bonuses are typically for new members only. If you had an account before, even if it was years ago, you might not be eligible. Some banks require a lengthy waiting period before a former customer can be considered new. Always double check. Time commitment. Some bank bonuses require you to keep your account open for a certain period of time, often 6 months to a year, or you'll have to forfeit the bonus or pay an additional fee to close the account. This can make it harder to switch banks if you're not happy with the service or if another bank offers a better bonus. Limited availability. Some bank bonuses are only offered in certain states or regions of states. Make sure your bank operates in your area before trying to take advantage of the bonus. Now, unfortunately, taxes. The IRS does consider bank bonuses to be interest, which means they are taxable. you'll receive a Form 1099 INT or interest for the bonus, and you'll have to report it on your tax return. Fine print. Always read the terms and conditions carefully. There may be other requirements or penalties that aren't immediately obvious. High fees. The bank accounts that offer these bonuses often come with higher than average fees. These can include monthly service fees, ATM fees, overdraft fees, and so on. These fees can quickly eat into or even exceed the value of your bonus, so be careful. Now, these fees may sound bad, and they are, but it's not always so grim. Avoiding the fee is generally easy and straightforward. If you're in a scenario where you cannot avoid the fee, it may be better not to open the account in the first place. If you do get charged an unexpected fee, give the bank a call. They want to make you happy, and if they can, they will. They usually give a grace period and may refund your fee. I know I personally messed up and have gotten back over $50 in fees returned back to me. Bank bonuses are a really underappreciated avenue for earning additional income. They offer a risk-free option due to FDIC insurance, allowing your cash to outpace inflation instead of idling while remaining completely safe. If you're a high earner, many workplaces allow you to diversify your direct deposits, which means you can leverage to your benefit, up to you. However, keep in mind the opportunity cost that comes with having your funds tied up in an account. To manage your accounts efficiently, maintaining an Excel spreadsheet for tracking account openings, closures, bonuses, requirements, and fees could be invaluable. If you're interested in diving deeper into the concept of opportunity costs, stay tuned for a future video by subscribing. I really appreciate the time you took with me. I look forward to growing with you.